team lead Affluent Clients, investment advisory personnel with First Asset Management. We are pleased to have you here with us today. This is the maiden edition for our bootcamp webinar series. Yes, the bootcamp. So stay strapped in and keep every distraction away from you. The idea behind this bootcamp, it's our own way of giving back and encouraging as many Nigerians as possible to have a mind shift change when it comes to investing in Nigeria. It's actually a drive for us to raise as many as 100 million smart investors, yes, 100 million people to start investing in Nigeria. It's very possible. So the idea behind this initiative, it's very exciting. Everybody's excited. So the idea behind this initiative is to increase confidence in Nigerians like you and I, using our personal stories, personal experiences, skill sets, and tips on how you can, shift from a mindset of uncertainty to certainty, and also begin your own investment journey in Nigeria as of today. Thank you once again for joining us. I'm not doing this alone. I have very capable hands and minds that will be sharing their own takes on today's topic. Today's topic is actually a very interesting one, and it's something that even I can relate with, because at some point in my life, I was actually afraid of investing. Today's topic is basically speaking on why people are afraid of investing, right? So sounds interesting, right? That's why we're here anyways. I'll quickly run through my colleagues who are joining me today for the webinar. I'll start with Laura Fisayo-Kolawole, who is the head Equities and Alternative Investments. Hi, Laura. Next on the list is Tutu Owolabi-Kadiku, head Fixed Income with a key focus on emerging and frontier markets. Hi, Tutu. Last but not the least is Gbolahan, Ologunro, a portfolio associate and a staunch portfolio manager, also with us here at First Asset Management. Gbolahan, how far now?
Yeah, very much with you.
Thank you. As much as possible, as the session is going on, we understand that you have questions, comments, and inquiries. Please note them down. There will be time for that at the end of the session, and we'll take as many questions and comments as time allows us. So sit back, relax, and like I said earlier, keep every distraction away from you, because this is a very interesting and touching topic for everyone in Nigeria today. So let's get right into it. Laura, why do you think people are afraid of investing? What's the fear? Why are people just afraid? Like the average Nigerian, if you say investing, like they're already just why are they afraid?
I know. So you know what, like so many thoughts come to mind, right? And I don't want to ramble, but when you say fear of investing, I feel like I want to expand that to maybe the things that hold us back from investing. And this is the beginning of a very interesting conversation, because I believe that people instinctively want to invest. Like, we want to make our money work for us. There was a colleague that talks about making your money work for you, second stream of income, all of these things. So I feel like many of us would love that. So what's the issue? The first one, the person that came to mind when you asked me this, the first one was trust. Okay, like who is not going to run away with our money? Because the truth, the truth is, you don't want to invest and then hear that it's a Ponzi scheme. And there have been a few recently in Nigeria, right, where somebody has just gathered all our money, billions. They've just gone, and you can't trace them. You can't like it's gone, thin air. So that's the first problem. Or you hear about like adjust schemes where maybe the person that you were all contributing with, the person is nowhere to be found. So that's the first. So I feel like trust is the first problem, right? So that's, and I feel like it's a real problem. It's you can understand it. Second one is lack of money. Let's be real, poverty, right? So to say it plainly, like many people feel like they don't have enough to cover their basic needs. After you've eaten, you've drank like normal water, not like you went to drink beer, normal water, you've eaten, you've drank, maybe you ate a bar, you drank, then you gave your parents money, you gave your kids money, your family, your aunts, you've done all of those things. at the end of the month, like you are in negative. So when someone says come and invest, like invest how, where, save what? So that's the second issue. The third one for me, I would say, is weak financial muscle. And I will contend that most of us in this chat are in this bucket. It's not like we don't have money like that, right, to invest. We will say, at the end of the month, there was nothing left. When I finished, at the end of the month, it was finished. But that's because you didn't prioritize saving or investing. That's the truth. Like, you have to make savings a priority. You have to make investing a priority. I tell all my family and friends, like, set a target, an aggressive one. And before you start drinking, you start clubbing, you've had one dinner left and right, save, like, invest first. So start of the month, when you get your salary, invest first. So that's how you build that financial muscle. Even if it's 10,000 naira a month, 20,000, 50,000, build that financial muscle. Those weak financial muscles for me are one of the things that really hold people back from investing. So we will say, I really didn't have money at the end. And it's true, they didn't have money at the end of the month, but it's because, one thing or another, when the money's in your account, there's a way it just flitters away and you don't even know how. So that's the third one. I think the fourth one that came to mind when you asked this question was lack of control. And I've dealt with this one personally because I speak to everybody about investing. So in my family, my usual way, if I meet you, 1-2 conversations, I've asked you how you're investing. Let me not lie to you. So I was talking to a few family members about investing, and 2 in particular who are entrepreneurs. They bounced me initially. They were like, I don't want a situation where I give you money, I don't know what you're doing with the money. I like to put my money in my business where I'm looking at it every day. Like, I have control. I know even if I lose money in the business, I know exactly how it happened. Like, I'm in control. And it's completely understandable. And I feel like we'll talk about these more as we move along. But
Yes, well.
that lack of control is also something that I think holds people back, especially in Nigeria where we have many entrepreneurs. So I don't want to go on and on because, time and all of that. But that trust issue, your money just disappearing, is a big deal. No money is also a big deal. Then many of us who can have money, but somehow at the end of the month, there's where the money is just not there. That's number 3. And then there are people who genuinely they want to be in control of their destiny. Even if they lose that money, they want to be in control. And that's also a genuine issue. So for me, those 4 things are the things that hold many Nigerians back from investing, I would say, for sure.
Thank you so much, Laura. I think for me, what really resonated is the weak financial muscle. I'm not making this up. I was speaking to one of my clients one time, telling him that, whatever idle funds you have, just put it in your money market fund account. And I'm not kidding. I quote, he said, my brother, no strength to add money. He literally said that. So definitely that weak financial muscle,
Yeah. And the thing is that, fear makes us reactive, but smart investing makes us proactive. And that's what we're talking about here. Smart investing. If you let these fears hold you back, you'll just be reactive. There was no money. And it's like, you'll be surprised that there was no money at the end of the month. Like, you don't understand where the money went to. It happens to everybody.
Yeah, happens to everybody. Happens to everybody. Thank you so much, Laura. No, let's take it even further. I mean, so we have discussed why people are afraid of investing. Tutu, can you share more light as to the different types of fears or biases that affect investment decisions, like you and I, like the average guy on the streets in Nigeria in particular, things that these biases Nigerians have created for themselves, e.g., village people, those kind of things. Can you share with us what you think?
Okay, well, thanks, Laura, for that feedback, and Muyiwa for this interesting question. If I was just to reframe what you just mentioned, you're just trying to say that what we're trying to do is to explore how fear, really, more than fact, hold people back from building wealth. I think that's the message we're trying to pass across here. And really, from where I sit, what's clear to me, Tutu, as a person, is that people are not really afraid of investing, right? It might sound not correct, but people are not afraid of investing. What they are afraid of is actually losing money, right? Is losing that money. So imagine you waking up like we do 9 to 5. Like I remember when I used to live somewhere in Ikeja, wake up at 5 o'clock in the morning, get to the office by 7:30, I don't get home till 10, 11. So imagine me getting paid at the end of the month. I finally get that paycheck and I put that money into an investment. And at the end of the day, I end up losing everything. It can be very devastating for anybody, regardless of your class. So this fear really of losing the money is what leads to people making very poor decisions or even an inaction completely, whereby they decide not to do nothing. So the do nothing strategy, or they take very, very poor decisions, particularly if those decisions are driven by either panic, so they're scared, it's driven by maybe overconfidence, like you feel like you know it all, or something called the head mentality, which I'll be explaining later, right? And I can definitely relate to this because when I lose money, right, the pain from losing money is huge than even when I gain money from the equivalent strategy. So the loss of that money is the reason why most people are scared of investing. So, but maybe on the bright side, right, the essence of this is trying to ensure that we can actually overcome this psychological force of fear. And one way we can do that really is by educating ourselves. We can conquer this fear by just educating ourselves, right? We only fear what we don't understand. Once you understand something, you can actually take active steps to conquer that fear. So I'd just like to say, at least this webinar is a step in the right direction to conquer that fear. Now, I can also speak to some biases that people tend to fall, or traps that we fall into in the course of making some of these investment decisions. I mean, the first one I'll start with is something called the head mentality, like I mentioned. And really, what does that mean? And please excuse me on the call. I'll try to be as layman as possible just to make it relatable for people that are not maybe familiar with investing. Now, head mentality is saying that everyone is doing it, I have to do it. So this is not your social media trend or challenges where things are buzzing, where you just want to jump on the bandwagon like everybody else because somebody made money from crypto. I also want to do it as well because somebody made money from maybe another Ponzi scheme. I also want to make money from it as well. I would just like to cite an example. I know someone very, very close to me. I won't disclose the name. He's very thorough with investments and is into real estate. And unfortunately for him, with this whole Ponzi scheme, I don't want to mention the name, that happened recently in Lagos, he put quite a lot of money in there. And unfortunately, he lost everything. And it was really, really sad. And he came to me and said, Tutu, I'm never going to do anything investment. I'm just going to stick to what I know and what I understand. And I could relate to him, but I also know that that was because he made the wrong decision and he just jumped on the bandwagon. So what is head mentality? Is doing something that you don't have a full understanding of. Is investments that you don't have fact sheet, historical performance, or the right financial advisors to guide you through. So that's one sort of bias and things that people tend to fall into when they're trying to make investment decisions. And the second one, I would just like to just state very, very briefly, something called loss aversion. And what does that mean? It's like the point I stated earlier. I cannot afford to lose this money. I've paid all my bills. This little one left, I cannot afford to lose it. And because of that, most people decide, okay, I'm not going to do anything. I'm just not going to do anything because I don't want to lose it. I mean, I know a lot of people join our webinars over time, and I'm one that likes to preach about reading as regards financial freedom. Now, there's a particular book called Rich Dad, Poor Dad. I don't know if I have people in the audience that have actually read that book. It's a very, very good book.
I'm sure we have a host of people.
Yeah. So in that book, the author mentioned something around the fear of loss is a path to paralysis. What that just means is that if you are so scared of something, you don't want to embrace it, so you do nothing. And really, that is the wrong move. So take, for example, someone like maybe me, right? I get money every month from salary. Maybe I get about 300,000 as my salary every month. Now, because I'm scared after dealing with all my expenses, I decide that I'm not going to do anything, right? Because I don't want to lose that money. But that is the wrong way of looking at it, because by doing nothing, you are guaranteeing a loss position. And the question is why? Many of us know today that 300 a year ago is not 300 today. The purchasing power of that fund is not as strong as it was last year. So ways by which you can sort of overcome this sort of bias is by investing. So say, for example, you take maybe 20,000 of that salary or the remainder that you get every month and put it in the likes of a money market fund. That money could have earned you a good amount of return. Now, what is a money market fund for those that are not familiar with? This has nothing to do with a Ponzi scheme. These are called mutual funds, right? They are regulated by the Securities and Exchange Commission that invest in very simple government-backed securities like T-bills and investment with very credible banks. So the better thing I could have done, instead of holding on to this loss aversion, I don't want to lose anything, and leaving my money in a savings account where I'm earning 4 to 5%, is putting that money in a money market fund, which is also open-ended, right? Which means you can actually go in there and redeem those funds when you need it. I could have earned as high as 20%. Now, if you're not aware, money market fund, most of the credible ones have done as high as 20% this year, from the beginning of January till now. Imagine if I had just taken that 20,000 and put it in a money market fund, I would have actually been able to hedge against inflation. So that's another bias that people tend to fall into. They don't want to lose money, so they do nothing. I could go on and on, Muyiwa, to be honest, in terms of some behavioral biases like being overconfident, the anchor bias, really recency bias, and maybe status quo bias. But I think I would like to hear from other members on the panel. So, in other words, please try and ensure that you don't fall into these two that I've actually mentioned. And I guess we'll still be unpacking it as we move on in the course of this session. Thank you.
Thank you so much. So that was very comprehensive. And like I said, even myself, speaking for myself, at some point in my life, I also had these biases. But I mean, based on knowledge, experience, I've been able to shed some of them off. Still battling with some of them, but we'll get there. We'll get there. Thank you so much once again. That being said, we've identified why Nigerians are afraid of investing. We've identified why, or different biases that affect investment decisions. Now let's now come to how we can overcome these fears, right? I would love to hear from all of you. With Gbolahan going first. Gbolahan, how do you think the average guy, the guy that has one shop and is selling, I don't know, drugs and medication, his business is not doing bad, and he's not bothered about investing in any financial instruments because he's afraid that they will chop his money. How can that guy overcome that fear of investing?
So good afternoon, everyone. Thank you, Muyiwa, for doing so well thus far. So I think, for that kind of guy, one action point that can be implemented is starting small with investing. So much has been said by Laura with regards to, those fear factors that typically hinders, Nigerians from embarking on the journey of investing. But I think if you want to sort of overcome that, you need to learn to start small. And I'm sure we're all familiar with the popular saying that Rome was not built in a day. So the same thing applies to investing. It is not a sprint, it is a marathon. So you've got to learn how to start small. Laura mentioned earlier that, yes, lack of financial muscle is also a major constraint. But I think for an investor who is also sort of, incapacitated to a large extent in terms of how much you can commit to say you want to invest in, the money market fund, again, by starting small with as little as 5,000 naira, you can actually start investing in a money market fund, which Tutu earlier described. So that's to make people realize that the journey of investing, you don't necessarily have to sort of liquidate all your investments, or some would say, oh, you need to probably sell your house, sell your properties for you to get onboarded with investing. But no, that's not the case I'm preaching here. I'm saying you can start very, very small. And the beauty about starting small is you're actually going to see how your investments will grow. And as your investments continue to grow, you get more confident with investing, and you can now begin to explore some, or should I say, more complicated or more complex investment structures. So if you start with a typical money market fund, which is highly regulated by Securities and Exchange Commission in Nigeria, and that fund invests typically in, money market instruments that are also backed by the federal government, treasury bills, or commercial papers issued by corporates. These are very safe instruments that you're investing in, that the fund manager is investing on your behalf. So by investing in such simplified structures, you can also begin to have a better understanding as to how investments work, because you're able to track the performance of your investment over time. So that would give you some level of, understanding about how investments works, and you can now begin to diversify into, say, investing in stocks. To that extent, if you look at Nigeria's stock market today, it has done fantastically well. And on a year-to-date basis, the market is up by, over 35%. And if you take a look at some notable stocks in the market today, the names like GTCO, MTN, about, 2-3 years ago, MTN sold shares to investors at about 168 naira thereabout. Today, MTN is trading at about 490 naira. So the point is, you might look at the share prices of some of these names today and you are still contemplating, oh, these prices are too high. Dangote Cement at close to 500 for just 1 unit of share. MTN about 490 for 1 unit of share. GTCO at 200. So if you look at all of these stock prices, you might think, oh, they are too expensive. I cannot start investing, but start small. I can remember when I started my career about maybe 6 years ago, I bought into all of these names at very cheap prices. So even, I mean, a name like Fidelity, I mean, it was trading at about 2 naira, 3 naira. Today it's at over 20 naira. So the point is, you've got to start small. Don't see your financial muscle as a constraint as to why you shouldn't commence investing. Again, money market fund with as little as 5,000 naira, you can start investing in that fund. For equities investment, again, as you get equipped with the fundamentals of investing, you can then begin to explore, I mean, more complex, I mean, investing like, I mean, equities. Again, for forex trading, Cybex, I think, which I mean to a large extent too shied away from mentioning. I think again, lack of knowledge about some of these investment structures could have also contributed to why, I mean, some people are still scared of, I mean, embarking on investing today. So the point is, start small, have a firm or begin to build your knowledge base about investing, and then you can begin to explore, I mean, more complex structures as you progress with your journey in investing.
Wow, I just have to quickly come in there. Oh, that was really interesting. So, from what I get from Gbolahan, you can sort of think of this as swimming. Swimming is something that I'm embracing right now because I don't know how to do it. So it's like when you're starting that journey, right? You don't want to just jump straight into the deep end. You want to start from the shallow end and then gradually work yourself up. So I think that's what Gbolahan is saying in terms of starting with low risk and slowly getting comfortable and building your confidence, right? Just to add to that Gbolahan's point, for me, really, Muyiwa, I would just say it's really automate and remove emotions, right? Ideally, what you want to do as an individual to instill discipline is automate the behaviors that you want to repeat. If you want to repeat something, you need to automate it, right? Just the way we always make budget for Netflix and maybe taking our boo to the cinema and things like that. It's also quite clear that if you automate and make investments something that is done on a regular basis, you can actually benefit from that, right? And what this also tends to do is actually remove that fatigue of having to think, oh, where should I put the money now? Or something just came up, somebody just called that they need help. Because it's automated, you are able to strip out any emotions and stay disciplined to that particular strategy. So that's one way, I think, in addition of just starting slow, that I feel like we can overcome some of this bias. Another one I can just quickly add is really education, right? I also mentioned earlier that if you understand something, you can't be afraid of it, right? If you understand something, you would embrace it, right? And really fear really fades with knowledge. So the more we educate ourselves around this product, just the way Gbolahan mentioned, the more comfortable you get with it, particularly if you have the right financial advisors to guide you as well and provide information that you need to ensure that you're invested with the right investment that suits your objective and your risk tolerance level. So those are the 2 points I just wanted to add. Automate and remove emotion. So once you get that salary, take the time out after this particular webinar to go to the bank and automate transfers into either money market funds, and also ensure that you also attend webinars. So instead of following everybody on TikTok and Instagram, try and also follow people that are into finance and financial education. I found out personally, I'm a YouTuber. I don't do Netflix. On YouTube, the wealth of knowledge there is so immense. You can actually learn so much by dedicating 15 to 20 minutes on finance. And that has really worked for me as well. So I just wanted to share those 2 points. Thank you. I don't know if Laura has anything to add.
Thanks so much, Tutu. I think Laura also has something to say.
I don't have anything to add per se, but really just to make the point about the education. And I say it because, like when Tutu said, automate your investments, remove emotions. You have to do some research first so that when you are automating, you're saying, I'm going to set up maybe 3 or 4 direct debits into ABCD. Because you've done the research already, because you understand, it's easy to make those choices. The truth of the matter is that sometimes people feel as if investments are gate kept, or like opportunities are only meant for some people, only for the wealthy, only for, but that's not true. And I think that's why we're here, to be honest, to disabuse everybody of that notion that it's not meant for the wealthy. It's not meant for a select group of people. And that's why both GB and Tutu have preached the gospel of like investing from 5,000 naira, everybody 5K. I feel like 5K is money that it's not, we can all afford 5,000 naira. 5K monthly, 10K monthly, 20K monthly. Challenge yourself. And just that challenging yourself, we talked about that financial muscle. Challenge yourself. So when you combine education, automation, starting small, challenge yourself. Oh, guys, millionaires, billionaires in the making. That's where we are. So you can have like, how much is money kind of money. That's where we're going.
True, because even the millionaires they start from somewhere.
Yeah,
They
we
all start
talked
from
about
somewhere.
educating yourself, right? Sorry to cut you, Muyiwa. I think, we're in a digital age now, so I think access to information is widely available for those who have keen interest in understanding investment. So we've talked about our money market fund. You can go to our website, you'd find our fact sheet, which is something that is disseminated on a monthly basis. So that fact sheet would give you broad information about our various products that we offer to different categories of investors, either investors who invest in Naira-based investments or investors who invest in USD-based investments or even ethical-based investments. So by accessing that fact sheet on a monthly basis, again, you begin to develop your knowledge base about different investment products. So that fact sheet, I think it's also a key takeaway point for, those on this webinar today to just help you to begin to develop your understanding about investment, even the economy and the financial markets as a whole. So by looking at that fact sheet on a monthly basis, if there's any term that is not clear to you, you can just punch it, on Google, if it's treasury bills or commercial paper, these technical jargons we've mentioned at this webinar. So you can just punch it, on Google and you begin to understand, those technical jargons that we've mentioned at this webinar. So
Thank you so much. Thank you so much. Thank you guys. Thank you so much. In addition to that, in terms of knowledge and education, that's why we're here. Affluent Asset Management. We have relationship managers that are ready to handhold you through the process, right? In terms of setting your own personal financial goals, identifying your objectives, and putting you in the appropriate buckets in terms of investing. As my colleagues have already mentioned, we have investments that cater to different stratas of life, different risk profiles, and different objectives. From the money markets to the smart beta fund. We'll get more into that. Let me not spill all the beans now. But thank you guys so much. Taking it from there, now we've spoken about how people like you and I can overcome investing. Can you share some insights as to smart investment principles people can key into from today? Like once this webinar is over, let them know start imbibing these principles. Gbolahan, do you want to go on that?
Yeah, so firstly, I'll start by saying diversification. So, today people tend to just, when they want to start, the journey of investing, just concentrate everything in one single investment outlet because they're probably very confident or they have good knowledge about that investment outlet. But I think it's also important to diversify, your investment. So in Nigeria today, people make financial plans and at the end of the day, they are unable to achieve those financial goals they have set for themselves. And one reason for this is perhaps because their investments are not diversified enough. And I would speak to investment diversification from two broad angles. One is within, as far as investments are concerned, one is diversifying across asset classes. Then secondly is within asset classes themselves, also try to diversify across currencies. So I think the second part is more relatable to Nigerians, and I would like to start off with that. So if you look at, the exchange rate naira to the dollar over the past 10 years, let me not even take us too far. Let's take our minds back to 2020, shortly before the onset of the pandemic, sometimes in January or February. Naira to dollar exchange rate was roughly around 363 to 365 naira to a dollar. And at that time, if you wanted to buy a Toyota Camry, popularly referred to as muscle in Nigeria today, with a sum of 2 million or 2.5 million, you'll be able to afford that vehicle. But if you look at the current market value for a second-hand branded version of that vehicle today, it is being sold for as high as, 9 to 10 million. In
Wow.
dollar terms, the value or the price of that vehicle has not increased materially. But the only reason why the price has gone up is simply due to the fact that Naira has weakened significantly compared to the dollar. 2020, we are at about 363. Today, the currency has depreciated by over 5 folds to over 1,500. So for someone who had a plan at the time to acquire a Toyota Camry, today you're unable to acquire that vehicle, not because you were not saving or you were not investing, but it's probably due to the fact that the savings you were setting aside, you didn't diversify into other currencies. And that's why I'm emphasizing on the need to not just
Mm.
concentrate your savings. Tutu has mentioned automating your savings, setting aside a specified amount on a monthly basis into an investment outlet. It can be the money market fund, but it's also important for you to understand the importance of also diversifying. And that's why I'm placing emphasis on diversifying across currencies. So ensuring that your investments are not just concentrated in Naira alone. That would give you, two major benefits. One is it would serve as an edge against currency depreciation or devaluation. So you're able to sort of withstand the negative impact of adverse movement in the currency. So if you probably converted your naira to dollar at 365 in 2020, today you're going to reap gains from two broad angles. One is the dollar value of your investment has increased. Then secondly, if you decide to now convert the dollar amount or your current value of your investment in dollar terms to naira, you're also going to reap the impact of the exchange rate movement. So that's, the benefit you stand to derive from what diversifying across currencies. So that's the second point I mentioned. The first point is diversifying across different asset classes. So we've mentioned, the money market fund, which is a purely money market fund, instrument that
Yeah,
invests
invested
in
in Naira.
short-term money market instruments. But as you keep your knowledge about investing, you can then begin to explore more risky investments or higher risk investments like equity. So you start by investing in a mutual fund, the smart beta equity fund, or our balance fund, or our balance fund. And by so doing, you'll be able to begin to expand your investment outlet to not just a pure money market fund instrument, but you're now investing in the equities market, gaining exposure to companies that are doing so well today in the market. As I mentioned earlier, the market has delivered about 36% return on a year-to-date basis. If you look at Nigeria's inflation currently at about 22%, if you started this year by investing in the equities market, it means you're already, you've delivered positive real returns for yourself this year because you're well ahead of, inflation. Even if you decide to look at the average of maybe 23% on a year-to-date basis. So two key points I've mentioned. One is ensuring that you diversify across asset
Right.
classes. So
Yep.
start off with money market fund, begin to build your knowledge base, and then expand to say equities investment. Start off with mutual funds before gaining direct exposure to these names. Then secondly, which I think is more important, ensuring that you are also not solely invested in a single currency. So diversify across different currencies. It could be investment in our dollar funds. It could also be investment in even gold ETF, which has also done quite well this year.
Thank you,
So
Paula.
over to you, Muyiwa. Over to
Thank
you,
you,
Muyiwa.
thank you. Laura, do you want to
Fantastic,
add to that?
fantastic. So I wanted to add quickly, right? Tutu mentioned automating your invest. See, I wrote that thing down. I'm not even gonna lie to you guys.
Even me, I'm
I wrote
taking
it
notes.
down
So I'm
because
taking
it
notes.
makes immense sense. All I will add to
Yeah.
it is automate for the long term. So imagine this, like we're all slaving away, we're working, doing our 9 to 5 or our, like Tutu said, 7 to 11 p.m., whatever it is, right? Or 6 a.m. to 11 p.m. And we're all slaving away. Maybe you retire when you're like
Very true.
55, 60, or even earlier, right? you have like another 15 to 20 years of life, God willing. You want to rest, you want to enjoy your family, you want to travel, you want to relax. You don't want to be asking your children for an urgent 5K, urgent 10K. Can you imagine? You know, you don't want to ask your family for money. In fact, you want to have money where you can even give your kids, your grandkids, you can still give. That's the kind of life you want to have. You're not going to have that life if you have not put a pot of money away, right? A significant pot that is invested, that is then still earning you an income, even when you're not drawing a salary from your day-to-day. To do that, your pot of money has to be working for you. So when you're automating your investments, right, put some of them into these longer term assets that will generate returns. GB is like the king of equities. He has been saying, he said he bought Fidelity Bank when it was 2 naira 6 years ago. See, Jimmy mentioned them earlier, right? I mean, yes, they're risky, right? But the point he's making is equities are risky, but they have high expected returns. And in fact, we have an equity fund, right? He talked about it, the Smart Beta Equity Fund. Those returns have been strong. They've been above inflation. Frankly, they've been above the index as well. So if we're going to pat ourselves on our back, they've like it has done well. So if you look at in 2023, for example, yes, now the fund was up 64% in 2023. It was up 43% last year. And this is on top of, by the way, and this year now, year to date, we're up 45%. He said the index is at 33. We've done 45. Imagine if you were invested in this fund over the last 3 years. You just put the money into investments like these. When you're automating, part of your automation is direct debit into some of these longer term investments that, yes, they will go up and down, don't get me wrong. But they are the kind of things that will generate you that longer term return over a 20, 30, whatever year period, so that when you get to that, your retirement, your golden years, you have throwaway money, like you are, you're chilling, not that, at that point, you're not chilling. So I think it was Shelby MC Davis, who's the founder of Davis Advisors. He said, invest for the long haul. Don't get too greedy, don't get too scared, but invest for the long haul. So as you're automating, make that note, automate for the long term. So let some of don't just think about saving for rent, saving for, the things that are nearby. But that 20, 30, sorry, that 15, 20 year retirement period, that's it. You want to have a good amount of money for that period. So please automate for the long term. That's all I would say as well. I think I'd add that.
Okay, I guess I can just join in as well. I mean, Laura, from what you said, it's obvious that, and what Gbolahan has said, right? Time in the market always outperform time in the market, right? Nobody knows where markets are going to be up or down. But as long as you stay invested for the long term, you definitely reap the rewards. Now, for me, I just want to make this relatable, right? In terms of the principle I want to speak to, right? I mean, we've talked about diversifying, investing for the long term, but you can't always strip out emotions. We are human beings, right? But what I feel like can really tie all of this together is really when investment has meaning, right? Fear takes a backseat. Seriously. Like if there's something that you can tie to the rationale behind making an investment, it propels you to overcome that fear. And let's take, for example, I will use Laura, for example. Now, Laura is someone that knows that she's very keen about languages. So she speaks French. I don't know if she wants to speak French on this call. And she's also encouraged her children, for example, to speak French. And because of that goal and that objective of ensuring that they can speak that language, she ensures that she invests a particular sum of money in a particular fund to ensure that they can actually learn French and speak it fluently. Same applies to somebody else. Somebody else, they always say a happy wife is a happy life. For me, for example, I want a very good kitchen. So my husband understands that he must dedicate a particular amount to a particular fund to ensure that by this time next year, I want to ensure that the kitchen looks this way. Happy wife, happy life. So what I'm saying in essence is, it's easy to say these things, diversify, invest for the long term, but I think what can get you there is really looking for an objective. What drives you as an individual? What are you passionate about? What goals are you looking at for your kids, your siblings, your family that you want to achieve? Try to speak to a financial advisor that can ensure that those funds are put in a those ones that put in investments that can help you get that goal. So let us try these investments to real targets. And by doing that, we can actually achieve some of those goals. So that's the only thing I wanted to add. So goal-based investing tied to tangible goals. That's the last thing I just want to emphasize from where I sit here. Thank you, Muyiwa. I don't want to speak too much, but yeah, that's it.
Thank you guys so much. I am literally taking notes. I hope our attendees are taking notes as well, because my people are dropping gems that you typically would pay for, but dropping it for free today. So I hope everyone is taking notes. I can see that people are dropping comments in the chat box. We'll prefer you drop the comments, your questions rather, not comments, questions in the Q&A chat bot, not under the comment section. And as much as possible, at the end of the session, we'll take as many questions as time allows us to. I can see there are a lot of engagements in the chat. The chat bot is blowing up, and it's encouraging to see. That means attendees are paying attention and keying in as much as possible. And also thanks to my colleagues for making this as insightful as possible. So taking it further, we've spoken on different smart investing principles. I noted a couple of them: starting small, diversifying, automate for the long term, adopt goal-based investing. So how can these 100 million smart investors we're trying to create, who can they speak to? How can they start this journey? Who can they speak to start this journey? Well, do you want to go first?
We will speak to you now.
Yeah, I'm going to see what is
like they will call you.
No, okay, before they go.
They'll speak to our investment advisors.
Just drop your number.
Drop your number in the chat.
Just drop your number.
Yes,
We'll
actually.
start reaching out to you.
So yeah,
Actually, they'll speak to us.
as a business,
Yes, speak to me.
you know,
Yeah.
so when we started, I talked about trust as one of the things that is a concern, right? First and foremost, so we laugh here, but ultimately you only want to speak to registered participants in the market. See, the SEC has a website. We can drop the link. You can go and confirm. So we want you to invest with us, but anybody you are investing with, make sure they are a registered participant. Like you would not put, if I said to you there was a Laura and Co bank and you should come and put your salary in there, you will not, because Laura and Co is not a CB. I mean, if you want to, I can take it because, you know, but see, you only would use a CBN licensed bank. And in the same way, you should only invest with licensed, registered companies. So that's step one, of which we are, which you can verify on the SEC's website. Now, having cleared that, so I think that really solves trust issue, because you know, when you have a registered participant, they're not going to run it with your money. If you have a concern, you can take it to the government. You know, you can take it anywhere, because in truth, we are under regulation. Now, once we put that to the side, please speak to us. You know, all of our investment advisors are standing ready and waiting to guide investors. So these principles that we've talked about are the day-to-day things that we talk about with all of our clients, with all of our families, with our friends. And we have the tools in-house, we have the solutions to help you start small, 5K, to help you diversify. We have many we have many products to help you understand what your risk tolerance is, to help you invest for the short term, long term, anything. Like Tutu said, you know, whatever it is that is driving you, what are those goals you have? We have the products. So our investment advisors are standing ready, waiting to guide you through the journey so that you can tie the objectives that you have in life, whether it's your wedding you're saving for, whether it's a holiday, whether it's rent, whether it is your retirement, to tie all of that to investment. So really, our advisors are top notch and they're waiting for you. Or we are waiting for you.
If I can just add to that as well, just trying to answer Muyiwa's question. One thing that's also key is that really our circumstances are not constant, right? Where I was 5 years ago is not where I want to be And I'm sure most people on this call, same thing aligns. So as your circumstances change, it's quite important as well that you're aware, you're also aware, and you're in touch with an advisor that can ensure that your portfolio is aligned to your objective. As you know, markets move up and down. So the allocation you would have to your portfolio maybe a year or 2 years ago might not be the same way. So that's why it's quite important. Just referencing what Muyiwa mentioned about staying in touch with the right advisors to ensure that they can evaluate your risk tolerance level, particularly when your circumstances change, right? You could have been earning 10,000 before, right now it's about 100 million. There's a need to reevaluate your portfolio, particularly as you age or your circumstances change, like I mentioned, right? So that's the reason why you don't just invest and leave it, obviously. You also need to ensure that you're partnered with the right advisors to ensure that when those circumstances do happen or situations happen being out of your control, you can actually have the right advisor to guide you on that journey and reallocate your portfolio to the right asset classes that ensures that you're still able to achieve that particular goal. So from a risk tolerance perspective as well, which we do in-house to ensure that you're invested in the right bucket. So that's what I wanted to also add to. Muyiwa,
So
back to you.
to quickly add to that, right? In terms of meeting up with your future financial goals, I think the point Tutu mentioned is very, very fundamental. So continually assessing your financial situation and then trying to align, your investment products. So you might have a plan, to probably buy a house, say in 5, 6 years time. But the question is, if you continue to pile in all your funds in naira-based investments, in 5 years time, will that put you in a situation where you're able to acquire a house in Banana Island? Again, I've mentioned the importance of sort of hedging against the weakness in the currency, which would also affect properties here in Nigeria, right? Because some of those properties, are usually priced in dollar terms. So continually assessing your situation, and then on that basis, you're able to realign or tweak your investment plans or your strategy to, a more suitable investment outlet that would align with, the changes in your financial situation. So very important points by Tutu, and I just thought to also stress that point.
Thank you, guys. Thank you so much. To wrap up that section, Laura's already spoken about the fact that we have investment advisors readily available to take you on this journey. We look forward to speaking, meeting, sharing ideas, views, insights as to how you can begin this journey. If you've already begun the journey, how you can maintain that steady trend you're already on this journey. We've already spoken about the different suites of our mutual fund products, which we have readily available, that cater to different client profiles, different client needs, different client objectives, and different clients' personal financial goals. That being said, at the end of the session, we'll be sharing our contact details, because I'm seeing many questions around, how do we contact you? How do we start? We'll be sharing all that at the end of the session so that you can engage with us as quickly as possible. We're looking forward to it, actually. We're looking forward to it. At this point in time, I will be taking questions from the Q&A. We have a lot, actually, and our time is limited. I'm actually happy we have a lot of questions, so I'll just try and take as many as I have a chance to. I have a question here, and the attendee is asking, what is the difference between the money market fund and the smart beta equity fund, and what are the risks associated with each of these funds? I like this question, very straightforward. This person is ready to invest, so anyone can go, actually. I'm just throwing it open. Anybody can go.
Maybe you want to do justice since you are the equity expert, right?
Yeah, I'll take smart beta.
No, he said, what's the difference? Not I'll take smart beta. What's the difference?
So look at it this way. For the money market fund, it's a fund that invests in money market instruments, pure money market instruments, government-issued treasury bills, commercial paper, and placement with deposit money banks. So for treasury bills, they are issued and backed by the full faith and credit of the federal government of Nigeria. So you can be assured that you're investing in the most safe investment outlets by gaining exposure to a mutual fund. On the other hand, for the smart beta equity fund, it's an equity-based mutual fund that invests in high-quality, high-rated corporates in Nigeria listed on the stock market. So by virtue of the asset allocation based on regulatory guidelines from Securities and Exchange Commission, which is the apex regulatory body for capital market activities in Nigeria, the fund is expected to have a minimum exposure of 70% to investments in equities. So today, the fund invests across, banking stocks, Greek names, in the cement industry. So it's more of, an equity-based mutual fund as opposed to, the money market fund that invests strictly in just, short-term money market-based instruments. And to just provide, context on year-to-date performances, like, Tutu mentioned earlier, the current yield on our money market fund is at 20%. And if you look at the smart beta fund, on the other hand, the year-to-date return is currently at 45%. If you look at the equities market, on the other hand, the market has returned roughly about 36% as of today, and our fund is up by over 45%. So the outperformance is very, very strong. 2 years ago, the fund returned over 60%. So, this
We've
track
heard the equity
performance
markets are
of,
doing
this
well.
fund,
I know
speaks
we've heard
to
you,
it.
but I
Yeah.
want to stress something, please. For whoever asked that question, right? It's quite
Okay.
important that you understand that. Like I mentioned, it's like starting swimming. Don't mind me and this swimming. I must conquer it this year. This swimming, right? If you want to start swimming, look at it this way. You have to start at the shallow end because you don't have the skills yet. That's what money market fund is. It's a very simple, basic product, right? It's like you can liken it to your savings account, right? There's no volatility with money market funds moving up and down the way equities do aggressively. So if you're looking for something safe to pay your rent, something simple that you can access like a savings account, that is money market fund. But once you have a deep understanding, your risk appetite increases, you have a deep one, and you're ready for the long term, like Laura mentioned. So you want to put that money there and you can withstand the volatility that comes with that asset class. You can diversify and put small in the money market fund. So what I would encourage is don't do one or the other, particularly if you're very, very young. You should have a lot of time to recoup any losses or the volatility that the market would present. So don't put all your eggs in one basket. Put some in the money market fund for monies that you want to access to do something that you need a very short period of time. And then for the equity smart beta fund, put it in something that you want to put that money for the long term. Then you can see that benefit of holding that particular portfolio. So just to add, thank you.
Thank you, Tutu. Which also takes us back to diversification, right? In terms of smart investing principles. Thank you so much, Tutu. I have another question here, and it's an interesting one. That means this attendee was definitely paying attention. I'm directing it to Laura because Laura spoke on control, like how the average Nigerian businessman or woman wants to control everything, and that's what dissuades them from investing. So the question here is, I'll try and paraphrase. Is there any reason why a business person who consistently makes profits through their business should start investing in things like mutual funds and other products you mentioned? So yeah, very good one.
This was the exact question, and the answer to it is exactly what got my family members investing. So you know what it is, right? It goes to the point to be made about diversifying, and it goes to also. So you're a business person. 100% of your wealth is from your business. So that's your status quo today. You make a profit, you apply it back into the business, which is fantastic. At some point, you want to start thinking about diversifying. You want to start thinking about a pot of money that is separate from your core, right? Which is from your business. Just as a way, it's almost like it's a way of managing risk. You make some profits, when your business is now a bit more stable. So, at the beginning, you start a business, you have to reinvest to get to a point where you are stable. When it's now stable, the question is, some of those profits that you're making, it's a good idea to take it out and begin to think about creating a separate investment pot, whether in Naira, whether in USD, whatever it is. But understanding that it's important to begin to diversify, begin to almost reduce your risk as well. Because entrepreneurship, business ownership, is one of the riskier forms of investing. In fact, it is the riskiest, because if it goes down, that's it. So unlike salary earners, being an entrepreneur is a riskier endeavor. And so as you think, especially as you think about building your portfolio as you get older, you're in your 40s, you're in your 50s, you want to start thinking about reducing your risk. And that comes by taking some of those profits, not selling your business, but taking some profits out and beginning to reinvest in other streams, other investment options to reduce your overall portfolio risk, to diversify so that if anything happens in one place, you have a bit of protection from the other. That was the exact conversation that, to be honest, got them investing. So that's on the one hand. On the other hand, the other thing that happened as well is one of them is also in a high cash generating business, where he's saying, "What, I have all this cash, yes, I'd reinvest at some point, but you know what, I need that money working for me. So my day-to-day business cash, how can I get it so that it's not just sitting in the bank and doing nothing, but it's working for me whilst I wait to do, maybe in a few months' time, I have an expense coming, I can save for a few months." So those two things. So there was the reinvesting business profits just to reduce the overall risk of the wealth, because you're at a point where all your wealth is in your business. You now want to diversify so as to reduce the risk. The second thing is you also want to invest even the business's short-term monies in something. We've talked about this money, it's our money market fund, but in shorter term investments so that generating something until you need it. So those two reasons are the reasons why we have a lot of corporate clients who find all our investment solutions very useful.
Thank you so much, Laura. I think we have time for just one more question, and it's also another practical question, and I'll be directing this to Tutu. Very simple and straightforward. What option would you best advise a 65-year-old looking to retire in 5 years? I like the question, very practical.
Okay, the generic response that would definitely be put it in a safe, less volatile asset. But my response to that is that's not the right response, right? I really need to understand this particular investor, which is what we try to do at First Asset Management. We try to ensure that we cater to each individual. You can have two 60-year-olds that their risk tolerance are completely different. Their objectives are completely different. And you also need to understand the existing exposures they have to other asset classes. So I can't automatically say, no, put everything in a safe investment. Ideally, what I'll tell you is, in terms of products that we offer bespoke portfolios as well to individuals, where we sit down with them, understand their long-term objectives, their goals, what the exposures are. And based on that, we can carve something out that suits that particular client. But if I was going to give you a generic answer, obviously, at this point in time, you're not making as much revenue and income as you were making in your 30s or your 40s. So your ability to recover from any volatility in the market is not as optimal as it was before. So the ideal thing will have been said, put some of that money in a money market fund, put them in a bond portfolio, which we do have in-house as well, and put some of them maybe in a balance fund and a dollar-denominated asset. So I would spread it across as well. But the ideal thing to do is speak to our financial advisors, then they can tell us something that suits this particular client, because everybody's different. I'm thinking of buying something. Laura is thinking of investing in something else. Gbolahan, maybe it's the equities, looking to buy more GTB and MTN. So we're all different. Thank you.
Thank you so much. Thank you so much, guys. Thank you so much. We are wrapping up now as we're pressed for time. I don't know. Can we get key takeaways from each of you? 5 seconds. Laura, someone said you have to do your own in French.
D'accord. Je ne peux pas faire ça parce que...
Oh.
Non, c'est pas bon, c'est pas bon. Je veux parler anglais. Oui. Okay. So, I think closing remarks. So to be honest, right, all our investments, they really are for all kinds of clients, individuals, corporates, cooperatives, frankly, whoever you are. There's a quote that a colleague shared, because I was like, I don't know what to say closing remarks, and a colleague graciously shared a wonderful quote by John Bogle, who is the founder of the Vanguard Group. And the quote is, investing is not as difficult as it looks. Successful investing involves doing a few things right and avoiding serious mistakes. Now, we've talked about some of those mistakes, those fears here. So go and say no more. That's it.
Thank you.
Okay, so for me, really, what I would just say is, I know some of you will just hang me by the end of this year if I'm not able to complete this swimming thing. But for me, right, fear in investing, right, is like standing at the shore afraid to swim, right? Yes, there will be waves, just the way we have circles in the market moving up and down, up and down. But with the right flotation and the right lifeguard, in this case, First Asset Management, you are more likely to enjoy the water and grow. So all I need to say is that there is no need to fear investments. You don't need to have millions of naira to start. You just need to begin today by partnering with the right person and having an appropriate plan. That's it. Thank you.
Thank you. Well,
Yeah, thanks so much, Tutu. So, I mean, for me, right, I would say it's okay to start small. Honestly, like there's no harm in starting small. So, start small, build your knowledge base about investing, but more importantly, stay consistent in your investment journey. And again, remember that investing is not a sprint, it's a marathon. So, stay consistent. That's very important. And again, to round it off, if you are worried about monitoring your investments, the investment advisors, on this call, the portfolio managers on this call, we sleep and wake up with the market every single day. So you have absolutely nothing to worry about. Bring your money to us, go to bed, sleep, go for your vacation, and you can be rest assured we'll deliver value to you at the end of the day. So thanks so much, everyone, for joining us. And on that note, I think we can draw the curtains.
thank you so much. Thank you so much, everyone. Thank you to all our attendees. And we've dropped our contact details. But to take it even further, you can follow us on all our social media pages at First Asset Management. That's First Asset MGMT, and we would love to hear from you. That being said, it's a takeaway for everyone. Remember that investing is a journey. It's not a sprint. With patience, discipline, and the help of an investment advisor here at First Asset Management, you can achieve your personal financial aspirations. Thank you, everyone. Enjoy the rest of your day.
Bye. See you at the next
Bye.
one, everyone.
Thank you.
Bye.